Hi, I'm Lee Stone and this is your MaxiForex Week in Review. Today we will be covering some of the major financial events of the past week and how they impact the global currency markets. But before we cover the headlines of the week, let's go over the last week's risers and fallers. The euro had a fairly strong week versus the dollar, having gained 2% leading into Friday trading. But by the end of the day on Friday, the euro managed just a 0.8% advantage over the dollar for the last week, closing at 140.32. The British pound also had a solid outing against the dollar leading into Friday trading, but like the euro, faltered some and finished the week just under 0.9%. The pair was last trading at 161.81. The USD gained some ground versus the Japanese yen, moving up 1.1% for the week and closing Friday trading at 81.26. The US dollar had a poor showing versus the Canadian dollar, dropping every day this week for a total weekly loss of 2%. The pair was last trading at 1.0004. Oil had a huge week, surging over 6.5% to close the week at $86.85 a barrel. Meanwhile, gold continues to rise, this week jumping another 2.5% to close the week at $1,393 per ounce. It was a busy week in news, but mostly for the US dollar. The week began with the US election results giving control of the House of Representatives to the Republicans. The federal interest rate decision was released and remained, as expected, at 0.25%. The big news, of course, came on Friday with the release of the non-farm payrolls report, which came out much better than expected. Here to discuss the impact of the dollar over this last week is analyst Martin Smith. Hi, Martin. How are you?
Very well, thank you, Lee.
So, as I mentioned earlier, it was a busy week for the dollar. What do you think had the most impact on the dollar?
Well, it wasn't only the dollar this week, was it? Japan laid out details of its planned stimulus package. The UK had a bit of a rocky week, though not against the dollar. India raised interest rates to fight off inflation, as did Australia. However, I would say that the Fed's decision to buy $600 billion worth of Treasury securities probably had the largest impact on the greenback. The move was announced on November 3rd and was said to be in an effort to fight deflation and lower unemployment. What this also does is lower the trade deficit, which many analysts believe shrank in September. This is probably the reason that the Fed garnered some heavy criticism for the move from many of its G20 partners, especially after the members pledged not to engage in actions similar to the one the US has just announced. Overall, I think we'll see a weaker dollar before it begins to bounce back, but it will be interesting to see how the central banks react this coming week.
So, was the dollar affected at all then by the election results?
Well, you could say that, if only because events always have, like this, as big as this, have a significant impact. But I believe that most traders and investors were awaiting the FOMC meeting and the Fed decision. The election results were largely expected to turn out as they did, and their impact is not something we will feel immediately, and therefore the other news did take precedent. I can say that regarding the long-term effects, statistics have shown that this combination of government, that is a Democratic president and a Republican majority in the House, the S&P 500 has surged on average 15%, according to Strategas research partners. With Republicans focusing on slowing down legislation that would be seen as bad for business, the stock market, of course, will react positively. That will probably have some negative effect on the value of the dollar, but will be positive overall for the US economy.
Okay. All right, well, let's move on then to our Ask the Broker question of the week. Aaron Martin of New Haven, Connecticut writes, after the Fed announced they were going to buy $600 billion in assets, the NFP report was released and was much better than what people were expecting. What impact will this have on the dollar?
Well, there's a fair amount of uncertainty regarding these mixed results. On the one hand, there is positive news regarding the state of the economy, and on the other hand, the Fed is taking measures as though the crisis is still in full swing. Non-farm payrolls report came out at 151,000 versus the 60,000. That was forecast, a great sign of confidence increasing. $600 billion is not a small stimulus plan, especially on top of earlier quantitative easing measures. And with oil surging, also a good sign of production increasing, there's a good chance the dollar slides negatively this week and next. I would take it as a wait-and-see approach because you really don't know how the markets are going to react come Monday.
Thank you very much, Martin. We hope you enjoyed our weekly review, and we hope you will join us next week. Until next time, be sure to visit us at MaxiForex.ru.